Hello friends, I am Vinu Ashok. In the last session, we discussed about the liquidation of companies. It was divided into two parts. In first part, we discussed about the theories of liquidation, what is statement of affairs, how to prepare the statement of affairs, and how to prepare the deficiency or surplus account. Today, we are discussing about the second part of liquidation, that is how to prepare the liquidator's final statement of affairs. As we know, the job of a liquidator is to collect the assets of the company and realize them and distribute the money realized. When all the winding up processes were done, then the liquidator prepared a statement of affairs known as liquidator's final statement of affairs. Actually, this statement of affairs looks like a cash book that consists of both debit side and credit side. The following are the various aspects of debit side. It consists of amount realized on sale of assets. In case of assets specifically pledged in favor of any creditors, only the surplus arising therefrom. The amount received from directors and other creditors of the company. In case of partly paid shares, the balance amount and the contributions made by the contributories. The following are the aspects of credit side. They are legal charges, liquidator's remuneration, liquidation expenses, payment of creditors, workmen's dues and claims, payment to preferential creditors, payment to unsecured creditors, and amount paid to preferential shareholders and the amount paid to equity shareholders. The another most important topic come under liquidation is liquidator's remuneration. What is liquidator's remuneration? How to calculate the liquidator's remuneration? Liquidator get a commission. He get a commission for their effort in the liquidation process. All the liquidation processes are carried out by this liquidator, so he get a commission for his effort. And this commission is on the basis of four elements. First of all, commission as a percentage of assets realized, commission as a percentage of payment to preferential creditors, commission as a percentage on payment to unsecured creditors, and the last one, commission as a percentage on the amount payable to shareholders. These are the four bases of calculating commission of liquidator. The various adjustments regarding the calculation of commission on the amount payable to unsecured creditors are the following. Firstly, if the amount available is sufficient to make the full payment to unsecured creditors, it means that if the available amount left after making all adjustments is sufficient enough to make the full payment to unsecured creditors, there is a formula. Liquidator's remuneration is equal to amount due to unsecured creditors multiplied by percentage of commission, that is rate by 100. Secondly, if the available amount left after making all adjustments is insufficient to make the full payment to unsecured creditors, in this case the amount is insufficient, so there is a formula. Liquidator's remuneration is equal to amount due to unsecured creditors into percentage of commission divided by 100 plus percentage of commission. That means if the commission is 3%, the 3 should be divided by 103, that is 100 plus rate. Let us come to the problem side. Here is a problem. We have to prepare liquidator's final statement of affairs from the following figures. There are some figures are there. Unsecured creditors rupees 1 lakh, preferential creditors rupees 10,000, debentures or debenture holders rupees 15,000, cash in hand 2,000, land and buildings 75,000, plant and machinery 15,000, fixtures and fittings 2,500, The following are the adjustments. The liquidation expense amount to rupees 1000 and a call of rupees 2 per share on the partly paid 10,000 equity shares was made and duly paid except in case of one shareholder owing 500 shares. The remuneration to liquidator at the rate 2% on the amount realized on assets and 2% on the amount payable to unsecured creditors. From the above figures, we have to prepare a liquidator's statement of affairs. Here is the liquidator's final statement of affairs. It has two sides, receipt side and payment side. In the receipt side, we record the amount of assets realized. It was shown on the question already. Cash in hand rupees 2000, land and buildings rupees 75,000, plant and machinery rupees 15,000, fixtures and fittings rupees 2,500. The sum of the all figures, the assets realized is rupees 94,500. Then we recorded the partly paid shares, the amount of partly paid shares. In the question, already shown that out of 10,000 shares, all amount of partly paid shares were received except the 500 shares. So the amount is 9,500 shares into rupees 2, that is 19,000. Let us come to the payment side. The first payment is liquidation expense. It already shown on the question, rupees 1000. Then the major important area is liquidator's remuneration. There are two types of commission in this question. That is on the basis of assets realized and on the basis of amount payable to unsecured creditors. And on the basis of assets realized, the total assets were should be taken into consideration, rupees 94,500. He got a commission on 2% of such amount realized. So liquidator's remuneration on assets realized is rupees 94,500 into 2 by 100, that is 1,890. Then another commission is on the amount payable to unsecured creditors. It is shown on the working note. The total of this assets remuneration on the basis of assets realized and remuneration on the basis of unsecured creditors is rupees 3,569. Then we recorded the debenture holders rupees 15,000. Then we recorded the preferential creditors rupees 10,000. And the remaining amount left after making the above items is the amount payable to unsecured creditors, that is rupees 83,931. Earlier we discussed about a working note regarding the calculation of commission on the basis of amount payable to unsecured creditors. This is the working note there. Calculation of commission on the basis of amount payable to unsecured creditors. At first we should take into consideration the total of receipt side. In this statement, the total of receipt side consists of amount of assets realized and partly paid shares. Amount received from partly paid shares. It consists of the total amount is rupees 1,13,500. Then we could deduct all the expenses relating to the liquidation. That is liquidation expenses rupees 1,000. Then we provided a remuneration to the liquidator on the amount of assets realized rupees 1,890. Then the debenture is 15,000, and after all the payment to preferential creditors rupees 10,000. The amount left after making the above items was rupees 85,610. 85,610. In the question, it should be shown that the total unsecured creditors is rupees 1 lakh, but here we had only rupees 85,610. It shows that the amount is already insufficient to make the payment to unsecured creditors. So in the case of insufficiency, the commission can be calculated on the basis of amount payable to unsecured creditors into rate divided by 100 plus rate. That is, here in the question, the commission is 2%, that is 85,610 into 2 divided by 1 not 2, that is rupees 1,679. It is the amount. It is the commission of liquidator on the amount payable to unsecured creditors. Thank you, and please subscribe my channel.